All right, breaking news here in California. We have a dream home program coming out for our first time home buyers. If it has been a struggle for you to purchase a home, then this could be the solution for you. We're going to break it down and see if it's going to make sense because you might not like it. So, the way you have to look at it is if your rich uncle, that's Uncle Sam in our case, has a lot of money, let's say 300 million, and he's going to divvy it out to everybody in the family that is a first time home buyer and going to help you with that 20% down. Now, we all know, or maybe you don't know, is that you don't have to have 20% down, but what it helps you with is avoiding what's called mortgage insurance. So the private mortgage, it's called PMI, private mortgage insurance, is a tacked on cost because you don't have your 20% down. It's not that it is a bad thing. It's just like, hey, we're taking a higher risk. The bank is saying, hey, we're taking a higher risk. So we're going to tack on this additional fee for a while, and different programs can allow you to have that go away if you have 20% equity that you gain over the years. And that's a whole nother story there. So let's keep on track with our program. So with Uncle Sam providing you with the 20% down, you are not going to have that private mortgage insurance tacked on, and you're not going to pay any payment on that loan. So you're literally getting that to help you get a lower payment. That's at the end of the day, really, when it comes down to our first time home buyers, it really comes down to the payment. So if you're currently renting at about a $3,200, $3,500, $4,000 payment, this could be the solution for you. If you're already kind of close to that ballpark, this could help you because at a $650,000 purchase here in our county, San Luis Obispo, that is going to be your payment about is $4,000. So I'm just going to give you that example. You can talk to my preferred lender on that, but that is what I'm working with right now with the people that I'm helping. That's a pretty common price point, or more of our working industry employees here. That's kind of what they're looking at. So I'm going to bring up a diagram of what we're going to be talking about so you can kind of see, we can go over some of the requirements. Of course, I want you to speak to my preferred lender to go over the logistics of this program. So just hold on one second. Hoping you're finding this information of value. Be sure to give us a like. It helps other people just like you find the info, and subscribe to the channel so you don't miss any future videos. Well, welcome back to Central Coast Living. And if this is your first time here, welcome. We're glad to see you here. And this channel, we talk about lifestyle, real estate, and everything in between to try to help you figure out where you want to land on the Central Coast. And in this video, it's super exciting to talk about this new program that's rolled out. It's in real time. It just rolled out today, March 27th. And I am just really trying to give you the information right now because this is the only time that I will tell you that if you're a first-time home buyer, which means you haven't owned a home, you or your spouse in the last 3 years, or your partner in the household that is trying to go for this, you just could not have owned a home in the last 3 years. So that's the first classification. So I'm going to bring up a little form here. We're going to go through some of these items, and I'm going to add some more details so that you have just a little bit of the meat and potatoes of the program that is going to help you perhaps move to California, move to the Central Coast. So let's get you the info. So let's break down the logistics of the California's new Dream Home for All program, which provides a down payment assistance. So as I just mentioned, it's all about the payment, but let's go over a few things. So how does the program work? So they're loaning you, let's say $100,000 off a $500,000 purchase. They're giving you the 20% down payment, okay, with the closing costs, to help with closing costs as well. So let's say you're going to sell that, and like this example here, you bought it for $500,000, your home sells 5 years later for $700,000, you'd owe 20% of the 200,000 appreciation. Okay, went up 200 grand in that a 5-year time period. So you would pay 40,000, and you would pay the original $100,000 back, so 140,000 back, and then you would keep the rest. So that's the appreciation part of it that goes back to the program, and that's something you have to be comfortable with. So, you know, it's like anything in investing. Is it better to own half of something than nothing? You know, and that is a personal thing that you need to evaluate for yourself. So if you have a hard time saving, things were going a different direction, and you have good high paying jobs, and this could be the solution for you. So not everybody is a good saver, but you've got the income coming in. So this is something that you can just chew on and see if it's something that'll work for you. Again, there's only a certain amount of money available. So once that money runs out, the program's done. So it's first come, first serve. Now, who's eligible? I just told you, first-time home buyers, what that means. You haven't owned anything over the last 3 years. Does have to be your primary residence, no co-signers, and non-occupants, non-occupant co-borrowers. So you can't have like mom or dad help you out with anything or be on the loan with you. So the other thing that you need to understand is you can only make so much per year. There's income guidelines. So for Santa Barbara County, which is a little bit south of us here on the Central Coast, so you might be thinking of moving here, and what that looks like for you. Okay, another important thing that you need to realize is that there's certain amount of income that your whole household can make to meet the guidelines for this program. So in Santa Barbara County, which is a little bit south of us, if you're going to be commuting to the Central Coast, San Luis Obispo County, and you're going to live in northern Santa Barbara County, perhaps household income is $198,000. If you're in San Luis Obispo County, you can make up to $216,000 in your total household income. So that's your total household income, both of you that are going on the loan, whoever's going on the loan, and then that is pre-tax gross income. So you got to put that into account, that is something that your household requirement is can only max that amount. Another thing that I want to let you know is that your debt to income ratios, it's called DTI. When you go through this process, let me tell you, you're going to get bombarded with acronyms all across the board. So just don't get overwhelmed. This is where your lender and your real estate broker really need to, you know, really hold your hand and make sure that you understand everything, that we try to break it down for you. So your DTI, what that means is that in order to qualify for this as well, you need to have a certain credit score. And they've actually pushed up the limits of your debt to income ratios, which means you can have so much debt that they calculate into the calculations for you to have either 45% debt to income ratio or 50%. So if you have 45% debt to DTI, then you have to have a credit score of 680. If you want to have a higher debt to income ratio at 50%, then you need to have a credit score of 700. How do you calculate DTI? So you're going to take all your monthly payments of your household, gas cards, revolving credit, department store, whatever is your monthly payment, the minimum payment only. So if your main credit card is $200 a month, your car payment is $300 a month, your gas card is $50 a month. If your another department store card is minimum payment $30 a month, we add all those up. Okay, you have that total. Then you divide that into your gross income amount. Whatever that number is, that percentage needs to be below those figures that I gave you, either 45% or 50%, because the rest of it has to calculate for your mortgage payment. So that's your debt to income ratio. So that's how they determine where your credit score needs to be. So it's either 680 at 45% debt to income ratios to 50% at 700 credit score. So if you have a better credit score, they're going to let you have a little bit more debt. If you have that little lower credit score at 680, then you got to go down that 5%. And it's not so, those are numbers that are pretty easy to work with. That's why you got to get with that lender and figure out that information. Real important. The other thing that you just have to know is you have to take this class, this 8-hour class. It's $99, $100, and you need to do that. There is a link that CalHFA, the program, has available for you to take that class. So that's in a nutshell. You're going to borrow some money and you're just going to pay it back. And then they get the little perk of that appreciation, 20% of the appreciation that you accumulate over time. Of course, there's more things to it. The nice thing is that I know my lender can do this whole loan in 30 days once you complete the full application. So it's just like normal. You need to upload online. You can do everything online with most lenders. You really got to work with someone that knows these programs. It's the only other suggestion that I would give you, no matter where you're doing it in the state of California. Be sure that this mortgage broker knows, because there's all these nuances. They're going to throw things at the lenders because it's going to be rolling out. Money's going to be divvying out. Some lenders say this will be available for 3 to 4 months. Some say up to the next 6 months. So it's first come, first serve. Get to it if you can. If this makes sense for you, this is a way for you to own your first home and get your foot in the door for home ownership. All right, friends. So the only way that we can help you find that sweet spot here on the Central Coast is you've got to reach out. You got to give us a call, text, email, day, evening, weekends. It does not matter, because we have your back when you're moving to the Central Coast, California. So until the next video, we'll catch you later.